So good morning students. Today I am going to start your next chapter, chapter number 15, reserves and provisions. So students, why reserves and provisions are maintained? So students, a business must maintain funds to maintain the future contingencies. So some future needs are arises. Okay, so for that, to meet these contingency for uncertain losses, the business must kept a part of the profit aside. Okay, so because contingencies are unknown, okay, for that purpose business make a part of profit set aside. To that we call provisions and reserves. Okay, so what is provisions, what is the difference between provisions and reserves? So we will understand first their meanings, and after that we do the difference between them. First is meaning of provisions. So provisions means the setting aside of certain amount to meet some contingency which may be expected, but not yet incurred. Okay, so the provision is a charge to profit and loss, and it is created to meet any depreciation in the value of asset, or to provide for a non liability, the amount of which is not certain. So students, what is provision? Provision means amount of profit kept aside, or we can say that provisions are charged against profit or loss account. Okay, so the provisions are those expenses whose are unknown. Provisions are made for those expenses which are known but their amount was ascertained. Okay, their amount was uncertain. Okay, it is not certain, but these liabilities are known. Known liabilities are like depreciation in the value of assets, doubtful debts. Okay, so number of provisions are made to meet these known liabilities are known but their amount was uncertain. Clear students, what is provisions? So next is some characteristics of provisions are there. First is provisions are made for expected contingencies which may occur in future. It is a charge to profit and loss. They are made for non-liability, the amount of which cannot be ascertained. They are always made for a specific purpose. It is a charge against profit. As such, it reduces the profit of the year in which it is created. So as we said that it is a charge against profit, means the provision amount is deducted from the profit. So it shows the profit in a less value. When actually the loss occur, it will be written off against such provision and will not affect the profit of the year. So students, when these contingencies are occurred, so the loss of these events can be covered from these provisions. Okay, because a particular amount is set aside from the profit. Okay, so when these contingencies are there, they can be written off from the provisions. So number of provisions are made, like provision for bad debt, provision for discount on debtor, provision for taxation, repairs and renewals. Repairs and renewal provisions are made because business work on machineries. All the work of the business carrying on by using machineries. So the machineries want some repairs and renewals, but their amount was not fixed. Okay, so provisions are made for repairs and renewal. Also provision for depreciation, provision for fluctuation in the value of assessment investments. Okay, next is importance of or objectives of provision. First is to ascertain the net profit or loss. In order to ascertain the net profit or loss of the business, it is essential that all expenses pertaining to that year, whether they are paid or not, and whether their amount is known or unknown, it should be debited from the profit and loss account. So knowledge of accurate financial position of the business. So when balance sheet is prepared at the end of the year, will depict true and fair view of the financial position of the business. Only if adequate provisions are made for anticipated losses. After that, arrangement of future losses and expenses. So future losses and expenses must be arranged by making provisions, because these losses and expenses are not ascertained. Okay, these are occurred any time in future, so business must play safe. They must maintain these provisions. Proper distribution of future losses. When these provisions are made of certain expenses, okay, so losses can be distributed easily. Next is reserves. So meaning of reserve. Reserve consists of sum set aside out of divisible profit of the for the purpose of strengthening the financial position of the business. So students, reserves are made for the expansion of the business, for strengthening the position of the business. If any business want to increase its business in future, for that purpose he kept a some amount from its profit aside. Means we can say that he do the savings from its profit. Why he do the saving? Because he want to increase his business. So for that purpose he need extra money. So for that extra money he can reserve by making he can collect by making reserve. So if he wanted to expand its business after 10 year, so from first year to 10 year he can earn profit, he will earn profit. He earned profit, and from that profit he was what he do, he can kept a particular amount in the reserves, and after 10 year that amount that is collected in the reserve he used for expansion of its business. Okay, so reserve means the amount set aside out of profit and other surpluses which are not unmarked in any way to meet any particular liability. Means there is a no particular liability, but these reserves are made for the expansion of the business. Okay, so these reserves are made for the expansion of the business, for the diversification of the business, and these are kept aside from the divisible profit. So divisible profit means when any person, when investor invest money in our business, the profit which is given to them, that is called divisible profit. So from that divisible profit a particular amount is set aside for the expansion of the business, to that we call reserve. Next is features or characteristics of reserve. Reserve is created out of net profit or divisible profit. They are also known as retained earning. Retained earning means earnings of the business retained with itself, which is undistributed. Next is creation of reserve is not legal requirement. It is created voluntary. If any businessman want to increase its business, they can make reserve. If they do not want to increase their business, it's not mandate, it's not compulsory. It is not created to meet any known liabilities. So no, in like provisions are made for known liability whose amount was not certain, but reserves are not made for any known liability. These are just made for the expansion of the business. Since the reserve present accumulated or undistributed profit, as such they belong to the proprietor and are shown on the liability side of the balance sheet. Next is when the amount of reserve is invested outside the securities, it is known as reserved fund. So reserve fund, the amount which is reserved taken as a reserve is invested outside the security or invested for the expansion of the business, to that we call reserved fund. Okay students, next is difference between provisions and reserve. So I hope meaning of both these terms are clear. What is reserve, what is provision? So reserve is an appropriation of profits and provision is charged against profit. Reserve is created to strengthen the financial position. Provision is created to meet the known liability whose value is uncertain. It is increase the proprietor's fund. Provision decrease the proprietor's fund. Reserve, it may be invested outside the business. If they want to expand their business, they use the reserved amount for in their own business. If they want to invest outside, then they can use it for outside purpose. Provision can never be invested outside. Okay, it can be utilized for distribution as dividend among shareholders. It can never be utilized for distribution as dividend among shareholders. So in balance sheet, reserve and surpluses are shown on the liability side. Provisions are deducted from the assets of the asset side. For which asset provisions are made, provision was deducted from that asset. Mode of creation, it is created from profit and loss appropriation account. Provision is charged by debiting the profit and loss account. Necessity, creation of reserve is discretionary. If there is a no profit, reserve cannot be created. But creation of provision is legal necessity. These are made even no profit is there. Next is types of reserves. So 3 types of reserve are there: revenue reserve, capital reserve, secret reserve. Revenue reserve is further bifurcated into general reserve, specific reserve. So what is revenue reserve? Revenue reserve are created out of revenue profit of the business. Such reserve represent undistributed profit and available for the distribution of dividend. So Kohler has defined revenue reserve is that portion or any detail thereof, or the net worth or the total equity in an enterprise representing retained earning available for withdrawal by the proprietors. So students, revenue reserve meaning means the revenue earned by sale of goods and services. If a business deals with goods and services, they can take part of these amount set aside, and to that we call revenue reserve. Revenue reserve is maintained from the day-to-day revenue of the business. Revenue means the profit which is earned by the business by selling their goods, by carrying out their day-to-day activities. Okay, so revenue reserve of 2 types: general reserve. General reserve are maintained for general purpose. No specific purpose is there. So their purpose may be strengthening the financial position of the business. Okay, so no main motive behind these general reserve. Okay, the amount which is reserved in general reserve can be used for any purpose. Okay students, next is specific reserve. So when a reserve is created for specific purpose like meeting for unknown liability or marking a provision or loss is called specific reserve. So like specific reserve, particular names are given to each specific reserve. Like first is dividend equalization reserve. If a particular reserve is made to dividend equalization means to provide the dividend to the shareholder, to that we call dividend equalization reserve. If particular reserve is maintained to purchasing new asset in the future, or we can say the replacement of asset, to that we call reserve for replacement asset, like workmen compensation fund, investment fluctuation fund. So when these funds are maintained separately or specifically, to that we call specific reserve. And when the reserves are maintained not for any specific purpose, to that we call general reserve. Clear students? Next is capital reserve. So capital reserves are created out of capital profits. Capital profit means when fixed asset is sold out, profit is there. When fixed asset is sold and on the sale of fixed asset, profit earned by the organization, to that we call, and that amount is kept aside by the company or the business for meeting its uncertain future liabilities, to that we call capital reserve. So the capital reserves are created out of the capital profit. So capital profit are profit on sale of fixed asset, profit on revaluation of fixed assets and liabilities, profit prior to incorporation, premium on issue of shares and debenture, profit on purchase of running business, okay, profit on redemption of debenture, and profit on forfeiture of shares. So all these items are related to the long term, means these profits are earned through a long term asset, through a fixed assets. So that to that reserve, when the reserve is maintained from the profit of fixed on the sale of fixed asset and all these other, to that we call capital reserve. Okay, students. So normally capital reserve are not available for distribution by of dividend among the shareholders of the company. However, it can be used for writing of capital losses. So capital reserve are used to writing of capital losses. Like if profit on sale of investment is using as capital reserve, so that amount is taken as a capital reserve, and that amount is used to loss on sale of fixed asset. Clear, students? What is capital reserve?